If it's January and you're already thinking, I know I'm missing something, you're not behind. You're normal. January is when tax paperwork starts arriving, but it never arrives all at once, and it never arrives in the order people expect. Some forms show up early, some show up late, some get corrected, and some never arrive at all, because they're not actually required. But nobody tells you that. So people spend January refreshing inboxes, checking mailboxes, logging into platforms they haven't touched in months, and convincing themselves that if one form hasn't arrived yet, something must be wrong. It usually isn't. Today's episode is about cutting through that noise. We're going to talk about what tax documents you actually need to gather, what you do not need to chase down, why certain forms always arrive late, and why 1099s, especially 1099K, 1099B, and 1099 NEC, cause so much unnecessary confusion. This is not an episode about preparing tax forms. It's not about issuing W-2s or 1099s, and it's not about filing your return. It's about understanding what paperwork matters and what doesn't, so you don't spend January doing unnecessary work or spiraling over missing documents. Because here's the truth. January paperwork is messy by design. Not because you've done something wrong, but because different forms follow different rules, timelines, and reporting systems. Once you understand that, the panic fades. Let's start by talking about why January always feels like a paperwork disaster, even when everything is actually unfolding exactly the way it's supposed to. Every January, the same thing happens. People expect tax documents to arrive neatly all at once in a tidy stack that tells a complete story about the prior year. That expectation is the problem, because January paperwork was never designed to work that way. One of the biggest misunderstandings about tax documents is the assumption that they all follow the same rules. They don't. Your employer operates on one timeline, banks operate on another, brokerages operate on another, payment platforms operate on another. Each of those entities has its own reporting requirements, has its own internal reconciliation process, and has its own deadline structure. So when your W-2 arrives but your 1099 INT doesn't, or when your investment statement shows up late, that doesn't mean something is missing. It means the system is working exactly as designed. January is a collection period, not a completion period. This is a mindset shift that makes everything easier. January is not the month when tax paperwork is done. It's the month when paperwork starts arriving. Some documents are due to taxpayers by the end of January. Others aren't required until February. Some can be corrected well into March. And the IRS allows this because it understands how information flows. Tax season is built around staggered reporting, not instant completeness. And corrected forms usually catch people off guard every year. Someone files early, then a corrected form arrives, and suddenly there's panic. But corrected forms exist because issuers reconcile data after year end, transactions settle late, and errors are discovered and fixed. A corrected form is not a red flag. It's often a sign that the issuer is doing things carefully. In fact, late or corrected forms are frequently more accurate than early ones. Another reason January feels chaotic is because documents arrive in multiple places. Some come by mail, some come through online portals, some require logging into accounts you rarely use. Some show up as email notifications, and some don't. There is no central inbox for tax documents, so people feel like they're constantly checking everywhere and still worried they've missed something. That stress isn't a personal failure, it's a system design issue. When information arrives piecemeal, the brain fills in the gaps with urgency. You think, everyone else has their forms. I should be further along. If I wait, I'll fall behind. But tax season doesn't move at the pace of your anxiety. It moves at the pace of reporting deadlines. And those deadlines extend well beyond January. And the IRS expects this staggered process. This is important. The IRS does not expect taxpayers to have every form in hand on January 1st. That's why filing deadlines are in April. Extensions exist. Matching occurs over time. Notices aren't immediate. The system is built to accommodate delayed and corrected information. Here's what I want you to carry forward. Missing in January doesn't mean missing forever. Late doesn't mean wrong. Corrected doesn't mean problem. Chaos doesn't mean non-compliance. January feels worse than it is because paperwork arrives out of order, not because you're failing at tax season. In the next section, we're going to get very practical. We'll talk about what documents you actually need to gather based on your situation and how to stop collecting paperwork that doesn't matter. Let's talk about what you do need next. Once you understand that January paperwork arrives in waves, the next logical question is, okay, So what do I actually need? Because one of the biggest sources of stress this time of year isn't missing paperwork, it's collecting too much paperwork. Let's simplify this. You do not need every document you've ever received. You do not need to chase every possible form. And you do not need to gather things just in case without understanding why they matter. You need documents that support income reporting and specific claims on your return. That's it. For most individual taxpayers, the document list is shorter than you think. You generally need W-2s from employers. This reports wages and withholdings. If you work for more than one employer, you'll have more than one W-2. 1099 INT and 1099 DIV. These report interest and dividends from banks and investment accounts. 1099B if you sold investments. This reports brokerage transactions. We'll talk more about why this one causes confusion later in the episode. Your prior year tax return. Not because you're reusing numbers, but because it provides context, carryovers, filing status, and reference points. Health insurance forms when applicable. Depending on your situation, this may or may not apply, and it's not something everyone needs to chase. That's usually it. If a document doesn't report income, withholding, or eligibility for a specific credit or deduction, it likely doesn't belong in your core pile. And for business owners, the focus shifts slightly. Forms still matter, but records matter more than forms. You'll want to gather 1099 NEC or 1099 MISC forms you received. These report income paid to you by clients or platforms. Your own gross income records. This is critical. Your income is what you earned, not just what appears on forms. Expense summaries. Whether from bookkeeping software, spreadsheets, or bank records, you need a clear summary of expenses. Mileage logs, if applicable. Mileage is one of the most common deductions and one of the most commonly misunderstood. Platform statements. These often show gross receipts, fees, refunds, and adjustments that don't appear cleanly on 1099s. Here's the key thing to remember. Forms support your reporting. They don't replace your records. If a form is missing, your income doesn't disappear. And if a form arrives late, it doesn't change what you earned. And for people who are both employees and business owners, this is more common than ever. If that's you, you'll likely have W-2s from employment, 1099s from side work, and business records that don't perfectly align with forms. That's normal. Your job in January isn't to force everything to match perfectly. It's to gather complete information so the full picture can be reported accurately. And this list is not a scavenger hunt, a race, or a test of diligence. It's a working set of documents that'll help tell a complete, accurate story of your year. Anything outside that scope is usually noise. So here's what matters most. Gather documents that support income and claims. Don't confuse forms with records. Missing forms don't erase income, and complete information beats early filing. In the next section, we're going to talk about the flip side of this, what you do not need to chase down, and why chasing unnecessary paperwork creates more stress than clarity. Let's talk about what you can safely stop worrying about. One of the most exhausting parts of January isn't gathering what you need, it's chasing what you don't. People spend hours hunting for documents that have little to no impact on their tax returns simply because no one ever told them that they could stop. So let's talk about what you can safely take off your mental checklist. You do not need duplicate copies of everything. If you already have access to a form, whether through an online portal or a downloaded PDF, you do not need a mailed copy, a second emailed copy, a just-in-case version printed and filed somewhere else. The IRS does not require multiple versions of the same document, and your tax return does not become more accurate because you collected the same form 3 different ways. One clean copy is enough. You do not need to chase forms for income below reporting thresholds. This one trips people up a lot. Just because you didn't receive a form does not mean income isn't reportable, but the reverse is also true. You don't need to chase a form simply because you earned money. If income falls below a reporting threshold, the payer may not be required to issue a form. That does not automatically create a missing document problem, and it doesn't mean you're behind. Your responsibility is to report income accurately, not to force every payer to issue paperwork they're not required to provide. You don't need forms that don't apply to your situation. This sounds obvious, but January anxiety makes people overcollect. People chase education forms when no education expenses were paid, health insurance forms that don't apply to their coverage, investment documents when no investments were sold, business-related forms when no business activity occurred. If a form doesn't support income reporting, a deduction, or a credit you're actually claiming, it doesn't need to be on your list. You don't need to gather just-in-case paperwork. This is one of the biggest sources of overwhelm. People think, I'll grab everything and we'll sort it out later. But more paperwork doesn't create clarity, it creates noise. Sorting through unnecessary documents slows the process and increases confusion, especially if you're trying to understand your own return. Less, when intentional, is better. You don't need to chase a missing 1099K to feel compliant. This one deserves a special mention because it causes a lot of panic. If you were expecting a 1099K and didn't receive one, that doesn't mean you're out of compliance. It does not mean income disappears, and it does not mean something went wrong. 1099K rules and thresholds change. Platforms issue forms based on their reporting requirements, not your filing obligations. We'll talk more about this specific form later in the episode, but for now, know this. Your tax return is based on what you earned, not on which forms arrived. And chasing unnecessary documents wastes time, increases anxiety, creates false urgency, and pulls attention away from what actually matters. January is already a high noise month. Reducing noise is one of the most effective ways to make tax season manageable. So here's your permission slip. You don't need every form, you don't need duplicates, you don't need paperwork that doesn't apply, you don't need to panic about missing documents in January. Focus on completeness, not volume. In the next section, we're going to talk about why some forms arrive late, why that's completely normal, and why waiting often gives you better information than rushing. Let's talk about timing next. By mid-January, a lot of people start asking the same question. Why don't I have all my forms yet? And the short answer is, because you're not supposed to. Late arriving forms are not a flaw in the system. They are a feature of how year-end reporting actually works. One of the biggest misunderstandings in tax season is assuming that because you want to file early, everyone else has to report early too. They don't. Different entities have different deadlines for issuing forms. Employers, banks, brokerages, payment platforms, investment firms, some forms are due to taxpayers by the end of January. Others aren't required until February. Some can legally be issued later if certain conditions apply. The IRS allows this because it understands something important. Accurate reporting takes time. Corrected forms are not evidence of sloppiness. They exist because data changes after the calendar year ends. Examples include late posted interest, investment trades that settle after year end, refunds or chargebacks, adjustments to platform fees, payroll reconciliations. Issuers often release an initial form, then issue a correction once everything fully settles. That's not a problem, that's quality control. And filing too early increases the chances that you'll receive a corrected form later, creating more work, not less. Investment reporting is often the slowest. This one surprises people every year. Brokerage-related forms, especially 1099-B, are often delayed because transactions settle on different timelines, cost basis information needs verification, year-end adjustments occur, wash sales and reinvestments complicate reporting. These forms are complex by nature, so they take longer. Waiting for them isn't procrastination, it's patience. If you earn income through platforms, apps, or marketplaces, reporting delays are common. Why? Because platforms have to aggregate millions of transactions, reconcile fees, refunds, and disputes, apply reporting thresholds correctly, match accounts to taxpayers accurately. That process doesn't finish on January 1st. So if a platform form arrives in February or is corrected later, that's normal. And waiting often improves accuracy. This is the part people don't want to hear, but it matters. Waiting often gives you fewer corrected forms, more complete information, less need to amend later, and a clearer picture of the year as a whole. Early filing feels productive, but accurate filing is what actually reduces stress. So here's what I want you to remember. Late forms are allowed. Corrected forms are normal. Waiting often improves accuracy, and January is not the finish line. The IRS built tax season around delayed and corrected reporting. You're not behind because a form hasn't arrived yet. Next, we're going to tackle the area that causes the most confusion of all, 1099 forms, especially 1099K, 1099B, and 1099 NEC, and why so many people misunderstand what they actually mean. Let's clear that up next. If there's one category of tax documents that causes the most confusion and the most unnecessary panic, it's 1099s. Not because they're inherently complicated, but because they're often misunderstood. So let's slow this down and talk about what these forms actually are, what they're telling you, and what they are not telling you. 1099 NEC, non-employee compensation. Let's start with the one most people are familiar with. A 1099 NEC reports payments made to you for services as a non-employee, typically independent contractor or freelance work. Key things to understand. It reports gross payments. It does not account for expenses. It does not calculate tax owed. It does not reflect profitability. If you receive a 1099 NEC, it supports income reporting. It does not define your tax liability. It does not replace your own records. If the number doesn't match what you earned net, that's normal. Expenses are reported separately. 1099-K, Payment Processor Reporting. This is the form that causes the most confusion by far. A 1099-K reports payment activity, not income. It reflects gross transactions processed before fees, before refunds, before chargebacks. That means the number on a 1099-K is often higher than what you actually received. Important clarifications. Not everyone receives a 1099-K. Thresholds determine whether the form is issued. Thresholds change over time. And not receiving a 1099-K does not mean income disappears. Your tax obligation is based on what you earned, not whether a payment processor issued a form. The form supports reporting. It does not define it. 1099-B brokerage transactions. This is the form that feels the most intimidating and often the most misunderstood. A 1099-B reports sales of securities, what it shows, gross proceeds, transaction dates, sometimes cost basis, sometimes adjustments. What it does not show clearly, your actual gain or loss without context, how everything nets together, whether tax is owed without further calculation. This is why 1099-B forms often arrive later and are corrected more frequently. They're complex by nature. Seeing large numbers on a 1099-B does not mean you owe large taxes. It means activity occurred. And here's the reframe that matters across all 1099s. 1099s report activity. Tax returns report outcomes. Forms support the story. They don't tell the whole story. When people panic over 1099s, it's usually because they assume the form equals tax owed. It doesn't. And what actually matters with 1099s? What matters is complete income reporting, reasonable reconciliation, clear records, consistent treatment. What doesn't matter? Chasing forms unnecessarily, matching every penny perfectly in January, and assuming the form is the final answer. Before we close, I want to be very clear about scope, because clarity prevents confusion. This episode is educational, informational, designed to help you understand paperwork. This episode is not preparing W-2s, preparing 1099s, filing forms with the IRS, offering 1099 services. Understanding documents is different from preparing them, and knowing what paperwork matters is often the first step to reducing stress even before anything is filed. Let's bring this home. January paperwork feels overwhelming because forms arrive on different timelines, reporting systems don't talk to each other, people assume missing means wrong, and no one explains what actually matters. But now you know, January is a collection period, not a completion period. You don't need to chase every form. Late and corrected documents are normal, and 1099s report activity, not tax owed. When you understand the purpose behind the paperwork, the panic fades. And that's the goal of this season, replacing urgency with understanding. If this episode helped you feel more grounded, I encourage you to subscribe to this podcast. Share this episode with someone who's stressed about missing forms. Thanks for listening, and we'll talk again soon.